كانت جزء لا يتجزأ من الدولة العثمانية.
We are being criticized for doing our job and for upholding the federal constitution. Like I have said in the past, I will not bend to such lame pressures and insinuations.
It's a wonderful initiative.
The Global South Network opened new horizons for judicial cooperations.
Global South Network provides a platform for meaningful dialogue and cooperation, fostering efforts to build a more equitable and resilient legal landscape.
GSN network continues to expand areas of activity, further strengthening its impact and reach.
The universal concept of justice compels us to join our efforts, and this is the forum for promoting the same goal.
Well deserved for the hectic activity you have made. I am astonished, I am amazed, I was impressed.
May I at the outset commend you, Dr. Ayad, for the immense work that you're doing in the GSN. The Global South Network is a much admired initiative.
It's commendable. South Network focuses on all disciplines and regions, creating a bridge between academia, civil society, legal community, etc.
Good afternoon, everyone. It's my pleasure to welcome you to the 34th seminar in phase 4 of the International Interdisciplinary PhD in Progress weekly seminar series organized by the Global South Network. And I'd like to thank Numa Ayad, lecturer in law at Leicester Law School, for organizing and leading this weekly seminar series and inviting me for chairing this session. My name is Zafer, Kanik. I'm a lecturer in economics at the Adam Smith Business School of the University of Glasgow. And I'm joined by a discussant and two peer commentators today. Dr. Neeti Shikha is the discussant for today's session, and Dr. Shikha is a lecturer in law at the Bristol Law School, University of the West of England. And Fransiska Ari Indrawati is the first peer commentator for today's session. She is a PhD candidate at the School of Law, University of Edinburgh, with a research focus related to the legal aspects of digital currencies, which is a very hot topic these days, right? And Volina is the second peer commentator for today's session, and he's a PhD candidate at York Law School, the University of York, and his PhD research examines the regulatory impact of open banking regulations on the development of data-driven competitive markets. And our guest speaker for today's session is Bhargavi Zaveri-Shah. Bhargavi is a PhD candidate at the Faculty of Law, National University of Singapore, and today she will present part of their PhD project titled The Legitimation Strategies of the Reserve Bank of India. And Bhargavi, so you will have 30 to 35 minutes for your presentation, and it will be followed by 10 to 15 minutes of comments and questions from our discussant and commentators, each from 3 to 5 minutes. And if time permits, then if there are questions from attendees, we will be happy to continue with those. So Bhargavi, the floor is yours now.
Thanks, Zafer. Thanks to Norman and the Global South Network for inviting me to present my ongoing PhD thesis. It's honestly an honor, and I feel that they're doing a fantastic job of putting together South Asia focused research. It's really hard to come by such groups where you can really share your research with with peers who are really focusing on that region. So I really appreciate this opportunity. I'll just put up my screen. So what I've shared with you all is really the first introductory chapter of the thesis, which gives an overview of the entire thesis. And I'm happy to go into the details of every proposition that is covered in the chapter. But I just thought I'll quickly just, run through, just jog everybody's memory on what the chapter was about in case they haven't had a chance to look at it, then, Right. So I just wanted to set up the puzzle which led me to the research question of this thesis, and then kind of explore the central argument. As we all know, the thumb rule since the 1980s, at least both in the macroeconomics field and in political science, is that central banks, when performing monetary policy or regulatory roles, they must be independent of the government. And in the literature, 3-4 reasons are given. The first reason is that actually monetary policy is best done by an institution that is not influenced by political cycles, right? So you don't want your monetary policy to match the political cycle, and because in the 70s it led to inflation, and generally the world had a bad experience with central banks that were politicized. So they said, okay, we need to remove this power of the sovereign and give it to the central bank, who will run monetary policy independent of the political cycle. The second one is it is believed that technocrats are better suited to decide monetary policy related measures, and actually people working in the government are generalists, whereas people working in the central banks are specialists, and therefore expertise will help us get better monetary policy outcomes. And, the cynical sort of line of literature, especially found in the political science realm, is that actually all of this is not really true. Governments outsource the money, the function to issue money, so that they are not blamed for, the hard political calls, and they are not blamed for the outcome. So it's really a blame shifting game that's going on. Whatever may be the reason, the truth is that now it is almost accepted as best practice that central banks should be independent of the government, and this is the best practice that World Bank and IMF have been actually asking the countries that they lend money to follow since at least the 80s. So then the question was that, okay, if central banks have to be independent of political influence, how do we get them to respond to democratic pressures, right? And what evolved was really, now what we understand as, how do we secure the democratic input legitimacy of central banks? How do we secure their output legitimacy, and how do we secure their throughput legitimacy? And what is input legitimacy? Input legitimacy is the idea that even if an institution is a technocratic institution, it has some feedback loops from the elected representatives. So now, commonly that you see that central bank, the Fed Reserve Board, Bank of Japan, Bank of England, the board members, the chairperson or the governor of the central bank, his appointment is required to be confirmed by the legislature. Often the governor has to testify before the legislature, and that's how, the world figured out that that's how we get this input legitimacy, the democratic legitimacy of central banks, despite them being independent institutions. Output legitimacy is the idea that, look, irrespective of what process you follow, irrespective of what your governance is, as long as you're giving me good outputs in terms of inflation, in terms of financial stability, you are okay. But output legitimacy, the way people try to secure it, policymakers wanted to secure it, is by making central banks independent. They said that, look, this was a discussion that we just had, that actually central banks that are independent can more credibly commit to inflation, to keeping inflation low, and more credibly to commit to financial stability goals, etc. And the final one is throughput legitimacy, and that is the idea that even while making decisions, especially regulatory decisions, central banks must take into account the feedback of the stakeholders, must respond and must be more responsive. And where central banks do make adjudication decisions. For example, when they designate an institution as a systemically important financial institution which must be subjected to higher regulation, that designation is effectively a quasi-judicial decision that can then be appealed before the court. So judicial review was also built in. So by the late 90s, what we really have as a package for governance of central banks is, number one, their boards must be, their governor must testify before the legislature. Their governor's appointment must be confirmed by the legislature. That is input legitimacy. So that's where we try to build in democratic loops. Number two, that they must be independent of political influence and political cycles. And that's where we give operational independence and financial independence to central banks. And number three, throughput legitimacy, which is the idea that if central banks perform regulatory functions, then they must respond to the public through notice and comment processes, through judicial review, and so on and so forth. So this was the package that is the kind of agreed package for good central bank governance. Now, in the case of Reserve Bank of India, so if you go to the next slide, we find that the Reserve Bank of India actually fares poorly on all of these, okay, on input legitimacy, output legitimacy, and throughput legitimacy. Why does it fare poorly on input legitimacy? The Reserve Bank of India actually has multiple tasks. So, for example, unlike central banks in the West, the Reserve Bank of India not only does monetary policy, but it regulates banks and non-banks. It regulates large swathes of the credit market. It regulates credit derivatives. It administers capital controls. So countries like India have, partial capital account convertibility. So it administers that whole regime of how much foreign capital can flow in, how much Indian capital can go out. It also manages the government debt. It runs 2-3 subsidiaries which offer tech products to the banking industry. So it does a whole bunch of tasks. So one thing that I missed is that one of the key ways of securing input legitimacy is not only by obliging the central bank to respond to the legislature, but also by giving the central bank only one task with a defined mandate. In the case of the Reserve Bank of India, that is not the case. All of these tasks are being performed without specified objectives, and that leads to a lot of conflicting tasks as well. So when the Reserve Bank of India manages Government of India's debt, its goal as the Government of India's debt manager is to get lower interest rates. And that in turn can induce an inflationary bias in its monetary policy. So a lot of these tasks of the Reserve Bank of India are conflicting, and there is no defined priority in the law about how should the Reserve Bank of India resolve these conflicts. If debt management conflicts with monetary policy, what should it prioritize, and so on and so forth. It also has low output legitimacy because actually the Reserve Bank of India has very low operational freedom. And in the chapter that I shared, I've given examples of why, the Reserve Bank of India has low operational freedom. And finally, it has low throughput legitimacy because the Reserve Bank of India's adjudicatory decisions are not really appealable. And the courts give a very high level of deference to the Reserve Bank of India. So if this is the case, which is that the Reserve Bank of India fares poorly on legitimacy. However, we find that nevertheless, the Reserve Bank of India enjoys reasonably high legitimacy in the eyes of the people in India. So where despite all these legitimacy challenges, RBI enjoys a high degree of legitimacy in India. Why? How do we know that? Because its tasks and powers have consistently been expanded over the year. Politicians have publicly acknowledged that Reserve Bank of India has served India really well. And then even the courts have generally acknowledged the Reserve Bank of India as a reasonably prestigious institution. And therefore, what is going on here? We have the paradox here where low legitimacy as per the conventional practices and the conventional wisdom of governing central banks, but generally high de facto legitimacy. So my curiosity was that what is the RBI doing right? What is the Reserve Bank of India doing right to enjoy high de facto legitimacy despite faring poorly on a lot of these conventional metrics of legitimacy? So that's the research question. So Norman, if you can just go to the next slide. Right. So how did the RBI build legitimacy for its expanding powers and authority? And my argument is, it's on the next slide, that RBI actually built bargains with key influential actors in the Indian financial system to build legitimacy for its authority, right? So who are these actors? One is it had a bargain going on with the Indian government, which continues to be the largest borrower from in India. It has a bargain with the Indian banks, which continue to be the largest formal sources of lending. So uh, like a lot of European countries and a lot of developing countries, India is a largely bank-led system. So we do not have a great bond market where people can actually make bond issuances and actually, therefore, most of the lending in India is done by banks. Now, Indian banks being the largest lenders, the second important constituency with which the Reserve Bank of India had a bargain are the Indian banks. And finally, the Reserve Bank of India had its own reciprocal understanding with what I call the financial intelligentsia, which is nothing but economists, analysts, the financial press, which it co-opts on a selective basis, which I call the financial intelligentsia. And my argument throughout the thesis is I look at the history of the Reserve Bank of India to demonstrate what these bargains were with each of these constituencies and how did they in fact entrench the Reserve Bank of India's legitimacy despite not meeting the conventional metrics of legitimacy. I describe what is the nature of this bargain in the context of monetary policy. In the context of monetary policy and credit creation, really the Reserve Bank of India had an understanding with the Government of India, wherein Government of India would ask the Reserve Bank of India to actually get the banks to subscribe to its own debt and in exchange give the RBI way more powers over banks, right? So this bargain actually held for the first 50 years of India's history. And then it started changing from the mid 1990s where once India adopted the liberalization reforms, it was decided that the Government of India can no longer rely on the RBI to get banks to subscribe to their debt. So then RBI realized that, okay, then now I need to my inflation expectations therefore can no longer be anchored to Government of India's debt, but I need to shape the inflation expectations of a whole variety of actors who are now newly entering the economy. So therefore RBI used very selectively the financial press, the analysts, the economists, to train them, to coach them, to report on the RBI. But this was also done on a very selective basis. And in the chapter on monetary policy, I've given examples from the biographies of RBI officers demonstrating how they selectively included people from the financial press and coached them to report on the RBI. And finally, from 2015 onwards, this bargain between the RBI and the financial intelligentsia also broke down. And what happened was that there was a formal agreement between the RBI and the government where the RBI got operational independence from the government and the government got the right to decide what was the acceptable inflation level. So this is the classic inflation targeting framework, which was also arrived at through a written agreement between the RBI and the government. So throughout RBI's history of about 90 years, really what has happened is that RBI has not tried to gain legitimacy by making itself more transparent or enhancing its throughput legitimacy or responding to the legislature. It has actually specifically entered into reciprocal relationships with the government, with the financial intelligentsia, and finally, again, the government in today's context. Then comes in the context of banking regulation, because like I mentioned, RBI also regulates banks and non-banks. Here, again, the legitimacy was built by the RBI and the government through a joint regulation model. So right from 1949, when India got its first banking regulation law, banks in India are being regulated jointly by the RBI and the government. And there are lots of references in the Banking Regulation Act where the RBI is supposed to consult the government before enacting any banking regulation measure. And this continued for a long time. And within this joint regulation model, the responsibilities are rather ambiguous. So what happens is that depending on the domestic political economy, the RBI influence increases when, for example, banks are stressed and the government's influence decreases. But they keep reinforcing each other's legitimacy by turning back and saying, always consulting with each other before regulating banks. What does this give the government is that it gives the government credibility that RBI continues to be the banking regulator. But when the need arises, RBI in turn steps back and says, hey, the government needs to pursue some development goals. So guess what? I'm going to regulate banks in line with government's development goals. So it's really a tango of legitimacy and credibility between the RBI and the government. That's what is going on here. And that's what I describe in the banking regulation chapter. And finally, on payments, right? Relationship on payments. Again, here, there is a reciprocal relationship that the RBI has cultivated with banks who are the entrenched intermediaries in any payment system. And this continued until about 2000. So just to take a step back, right? RBI plays three roles in the context of the Indian payment system. It monopolizes all clearing, interbank clearing, and it gives only banks access to the payment settlement systems that it used to run. By the 2000s, a lot of non-banks, as you all know, started entering into the payment space. They came in with different business models. Their technology was much more suited for retail payments as opposed to interbank payments, and retail consumers started adopting these, new payment technologies much faster. The volumes increased. But this presented a challenge to the RBI because the RBI would now have to then look at payment flows being made across tech firms, and they did not have the wherewithal to decide how to regulate these business models. So finally, the RBI assumed regulatory powers. So the full Payment Systems Regulatory Act was also drafted by the RBI. It was spearheaded by the RBI. The government literally just took it and just tabled it on the legislature and said, look, RBI will do the job. And then after having done this, it has always given RBI preferential access to the payment services sector. And that's how, so banks in turn get to remain the entrenched intermediaries. RBI in turn continues to control this new payment system with different kinds of non-bank service providers through the banks. So for example, RBI has granted only one retail banking license to an organization that is fully owned and controlled by banks. So today, if any non-bank wants to offer a payment service in India, it has to tie up with a bank, and only then can it offer that payment service in India, such as UPI. So these are the three kind of grand bargains that I described throughout the thesis to in support of the central argument that actually it is not the conventional models of legitimacy, but these kind of bargains that the RBI has pragmatically entered into from time to time with powerful actors in the financial system to legitimize its control. And the last slide is just a summary of everything that I just said. Finally, I conclude my thesis by talking about how pragmatism in RBI's approach towards its own legitimacy actually helped it expand its powers and authority, and what are the possible constraints that come with a pragmatic legitimation strategy. That's it from me.
Okay, great. Thank you, Bhargavi, for this nice presentation. So now we will continue with Neeti Shikha's discussion. It will be around like 5 minutes, and then after Neeti, then we will have our commentators discussions. Yes.
Thank you. Thank you, Bhargavi, for this wonderful presentation. It was really exciting to read, the documents, the chapter that I got. And what really strikes in your work is that you offer a deep institutional history of how a central bank in a developing economy has sought to build and sustain legitimacy across 90 years. I also found it very interesting, the central paradox around which the thesis is framed. Despite weak formal legitimacy, little parliamentary oversight, and strong government control over the appointments, and ambiguous statutory objectives, RBI has expanded its power and continues to enjoy considerable respect both domestically and internationally. Now, that is an important puzzle, and this thesis makes a real progress in helping us understand why is it so. You make some very valid contributions. Your work provides a much needed empirical account. you provide a textured institutional history that is built from remarkable range of sources, archival materials in Pune, parliamentary debate and statutory amendments, and even biographical accounts of governors and senior officers. Now, this mix of sources produces a far richer picture that we usually see in a cross-country indices of central bank independence. Another contribution which is very relevant is that you advance an innovative framework. Instead of relying on principal agent or trustee model, your work shows how RBI cultivated legitimacy through task-dependent bargains. I will not go into the three constituencies that your work argues in the interest of time, but that was very striking. And through these bargains, RBI traded privileges such as preferential access to clearing system, selective release policy signals, and in exchange for recognition of its authority. Now, this emphasis on bargain and reciprocity captures something important about how legitimacy is built in practice. The third contribution that your work makes is the broader contribution to literature on non-majoritarian institution. It challenges a tendency to evaluate central banks only in terms of independence or accountability metrics, which has been the larger interest of scholars so far. Instead, what you do in your work is you document the informal, negotiated, and often elite-driven processes by which such institutions carve out space for themselves in the political economy. Now, I do have some thoughts and questions that might provoke you for further work. Firstly, on the conceptual framing, your thesis describes these bargains as legitimation strategies. I'm just thinking, or can we rather read them as strategic cooperation or even a form of regulatory capture in reverse? Should we how do we distinguish between bargain that builds legitimacy from one that entrenches dependency or capture? Now, this is important because legitimacy implies consent and stability, while the capture suggests rigidity. Now, second food for thought for you is, RBI is an unusually large and multitasking central bank in a democracy of continental scale. Now, how far do you think this model can travel? Do you think the same logic of bargains explain the endurance of central bank in countries like Brazil or South Africa? Or do you think this is this case is limited to the to India, particularly because of the sequencing of planning or liberalization or the technological disruption? And the third food for thought for you is, the three constituencies in your framework, which is the government, the banks, and the financial intelligentsia, they are all elite actors. What about ordinary citizens? Moments like 2016 demonetization, where public trust was visibly shaken. Now, do we see the limits of elite bargain as a basis of legitimacy? And final on temporal shifts, you have clearly traced three eras: pre-1990s, then 1990s post-liberalization, and the fintech disruption. Now, I'm wondering whether these three phases actually require a different theoretical lens, perhaps from the development state theory in the first period to reputational or informational legitimacy in the more recent ones. Now, that could be a very interesting, extension of your work. And now let me close by saying that your work is very original account of RBI's institutional strategies and contributes to a comparative debate on central bank legitimacy in the larger, global discussion. And it reminds us that developing economies and legitimacy often emerges less from formal structures and more from pragmatic bargains with powerful constituencies, as your work has described. And I really commend your work for rich, ambitious, and thought-provoking, dissertation that you have taken. And I look forward to the discussion now. Thank you.
Okay, great. Thanks, Neeti. And now we will continue with Fransiska Ari's comments, and then Volenam's comments. Fransiska, the floor is yours.
Yes, thank you. So I'm not familiar at all with the Indian law or RBI law, but sort of my question is that how to create the balanced relationships or to ensure that the symbiotic relationships created by the RBI with the institution will not interfere with the independence of the central bank itself in exercising the task. And related to your presentation, do you recommend any amendment on the RBI law or RBI Act or anything else if RBI keeps expanding its authority to other institutions in the future? So that's my question. So, but overall, I really enjoy your presentation. Thank you.
Okay, great. And lastly, Volenam will provide his comments. Yes, please.
Well, thank you, brother, for a very interesting presentation. I have few comments. Like the first one, because I'm not familiar with RBI and Indian law, so you said that it has kind of multitask. I would like to ask about the mandate. Usually, the central bank have a one mandate or dual mandate, but of course, they can exercise many regulatory tools to achieve the mandate, to maximize the employment or the price stability. Yes. So, what is the end mandate of the RBI? And secondly, I would recommend the stakeholder theory about the power dynamic between stakeholders and try to describe like the position of RBI in the power structure between the stakeholders and the classification of that stakeholder, like what kind of power it has. Is it independent or independence in relation to other stakeholders? And also another comment about the payment clearing system. When you said that the payment service providers didn't have access to the clearing system. In UK, it was the same before the open banking, and in Vietnam it is the same. But after in the introduction of open data, they allowed other service providers to have access to the clearing system. So maybe it will be the case for the India. Thank you.
Great.
Okay, great. Yeah. So let's proceed this way. So I think like Bhargavi was already started. So we first hear Bhargavi's answers and further comments, and then we will let, if there's any attendees want to ask any questions, we will take those questions. And then finally, I can add some comments too, if time permits. Okay. Yeah.
Okay, great. Okay, so just, thanks a lot for your comments. I mean, some of them, frankly, I don't have an answer to. I'm also struggling. So, for example, the point that Neeti made about legitimacy versus capture, right? To what extent can you call such bargains-driven legitimacy, right? Like, I mean, would you really call it consent of, would you really say that RBI is generally an acceptable institution simply because it has these bargains? I don't think so. So I think, it's the purists wouldn't call this legitimacy because purists have a very set notion of what is truly legitimate. But if we actually look at the signs of whether the RBI is legitimate, there is no survey done on whether do you believe RBI is legitimate, for example. But the fact that the RBI has survived so many transitions, it survived a partition, for example. It's a colonial institution, started with really low trust amongst the people. It survived the partition. In fact, after 1991, Neeti, as you know, a lot of the government departments were downsized and in fact dismantled. RBI's powers were in fact expanded. That tells me, and even the Supreme Court observation that I've mentioned on my slide, that tells me that at least there seems to be broad legitimacy of the Reserve Bank of India in the way that we think about, okay, is it a legitimate institution? Is it a respectable institution? By and large, it seems like it is. Although agree with you, there's no survey done, and 100% agree with you that would you call that bargain level legitimacy? And that I try to address in the conclusion chapter, because so far I have done an explanatory thesis. I haven't gone into the normative aspects of what this could mean for exclusion of the people, what this could mean for exclusion of various stakeholders. So what I've done is in the conclusion chapter, I've written about the constraints of bargain-driven legitimacy, where one of the constraints is, of course, that, listen, this can lead to capture, and capture in turn can, diminish all the legitimacy that you actually managed to build for yourself. Something like what started with the demonetization initiative, right? The demonetization measure. So I try to deal with it a little bit in the conclusion chapter, but I haven't really gone into the normative aspects of what this kind of legitimacy can mean for everybody else. The goal was to just kind of do a legal history, like you said, like a descriptive analysis of what is going on here. Why is this paradox even existing on the face of it, at least? So afraid I don't know if my thesis will ever answer that question, maybe at some point in the future. The applicability to other EMs. So I agree with you that, these informal agreements, for example, actually become the source of a lot of power in institutions in emerging markets. In the United States, for example, the Federal Reserve had entered into a similar agreement with the US Treasury in 1951, right? So even there, the legitimacy, the independence of the Federal Reserve actually came from an agreement, and then it became practice and custom. But, even in developed countries, it seems to me that there are these bargains going on, at least in the early stages. Then it finally gets codified into what we now understand as best practice. So it seems to me that a lot of people across countries will be able to relate to this. The hard part is that while these bargains are reported by journalists, we as academics do not find it maybe important enough, interesting enough to go into the nitty-gritties of these bargains. I found it very intriguing to go into the nitty-gritties of these bargains, but otherwise these bargains are, they're casually reported in the press, etc. But it seems to me that they exist everywhere. It's just that systematic studies are hard to come by recording the terms of these bargains, and which is what I've tried to do through the thesis. On Fransiska's point on how do these bargains affect the independence of the central bank, right? So I want to say that most of these empirical, hardcore quantitative studies classify independence as a 1 or 0. You are either independent or you're not independent. You are either accountable or you're not accountable. I want to say that because of these bargains, actually that 1-0 dichotomy breaks down. Because in some circumstances, the RBI gets more when it asks for something. In some circumstances, the government gets more, and that's precisely the bargain. That's the tug of war that is going on. So it is very hard for anybody to say that for 90 years of its experience, RBI has been independent or not been independent. It's actually as, banal as it sounds. It is in fact a tug of war, and it depends. I mean, sometimes RBI gets its way, sometimes it doesn't. Sometimes government gets its way, sometimes it doesn't. That's what I'm trying to bring out, that independence is on a spectrum. It's not a 1 or 0. And, that's what I'm trying to sort of bring out through this descriptive analysis. On Nam's point, sorry, am I pronouncing your name right? Nam, right? Okay, great. So RBI has multiple tasks, and each of those tasks have unspecified mandates. So for monetary policy, for example, until 2015, which is about 80 years of RBI's existence, there was no mandate. So if I read the preamble of the RBI Act to you, you will find it almost amusing. It basically said, because the RBI Act was enacted by the British in 1934, the preamble of the RBI Act read that currently it is not understood which monetary standard will be optimal in the world. And therefore, we are enacting the RBI Act as a temporary measure. That was literally the language of the preamble of the RBI Act until 2015. It wasn't changed. So there was a lot of ambiguity in what RBI had to pursue. when it did its monetary policy task. Could it pursue employment? Could it pursue inflation? Could it pursue, I don't know, exchange rates? Could it pursue growth? There was no, and it used to kind of, make these calls, make these decisions on its own, which is why the absence of input legitimacy, democratic legislatures oversight on the RBI became a bigger problem, at least in formal terms. But to answer your question, until 2015, there was no specific mandate. After 2015, price stability is the mandate and an inflation target has been given, but that too through an agreement between the RBI and the government of India, and that's how it works. And I didn't quite understand your question on power dynamics and stakeholder classification. So if you could explain that, that would be great. And just on your last point about access to payments infrastructure, right? I just want to add, it's true. I think a lot of central banks only recently started giving access to non-banks to their payments infrastructure. But in the case of the RBI developed the initial payments infrastructure, what we understand as the RTGS and all those payments systems, and it transferred it to an organization that is completely bank held. And now it is not licensing any other organization from developing a retail payment system. So yes, it has opened up access just like the Bank of India, just like the Bank of England for its RTGS system, but all other payments infrastructure that it had developed, it has transferred it to a bank-held entity, to an entity entirely owned and controlled by banks. And that's where it gets even more complicated. And while the RBI has formally said that we will also now give access to non-banks, they basically made it discretionary. And very few non-banks have actually managed to get access pursuant to that announcement. So we'll see how it goes, but completely with you that most central banks until recently did not give access to non-banks to their own payments infrastructure.
Very nice. Okay, so we will take some questions, but so from Bhargavi's comments, Volena. So, may I call you Vo? So do you want to say any addition? Do you want to respond to what Bhargavi asked you, or you can discuss after as well?
Okay, I will discuss after.
Okay, perfect. So are there any other questions from the attendees? Thank you so much. This was a very lively discussion, by the way. Yeah.
If anyone doesn't have any question, I do have a question. Actually, there are a few questions. So I think most of the points Neeti addressed very well. I think she was very concise and she touched upon many points. But I was somehow a bit confused about one of the slides in which you cited the Supreme Court ruling, and I was not completely sure if the remarks about the autonomy of the bank from the government, can we really equate that to the idea of legitimacy? Because you see, I mean, my work is not focusing on the banks and economic institutions, but they are focusing on the legal institution, the Supreme Court, and their legitimacy and the public support. And I completely agree. I think one of your responses, which you talked about independence, actually, it is also valid for legitimacy. When you said that it's a continuum, it's not a yes-no concept, it's a more or less concept. And I think when building upon that idea, I wonder if you thought about if legitimacy is similar, like high level of legitimacy could involve direct support of public, visible in public opinion surveys, some kind of a protest, or some kind of a, press conferences from different groups, or the low level could be one institution or another institution. For example, a judgment, appreciating the central bank's performance, that could still be counted as legitimacy, but not, the high level of legitimacy, like Neeti rightly pointed out, that what about the ordinary citizens? However, criticizing the same point, the counter argument could be that if there is any need for ordinary citizens to understand and know and support, if it is not directly relevant to the purpose and the rationale of that institutions, especially in case of Central Bank of India, that is a very complicated institution. The economic processes are not very understandable. So ordinary citizen can, say something about very much which is affecting them or their life, and in some cases they will always complain without understanding the complications. So should we really take that as a source of legitimacy, considering when we assess legitimacy? So I was wondering that if all these things, because one of the sources which you cited is the 1995 one that do touch upon all these points. So I wonder if you thought about these issues. Thank you.
Right. So should I respond, or Zafer, would you like to answer?
Yes, please. Go on.
Please.
Please.
Okay.
Yeah.
Okay. So Norman, thanks. That's helpful. I like this. I hadn't thought of the high level and the I think you categorize it nicely. High level legitimacy, where one institution gives legitimacy to another, by respecting it or whatever. And then there's the street level legitimacy, if we may say it that way, right? So actually, the thing is, only very recently, after 2008, have surveys started being conducted of trust in central banks. So I think, for example, there are a few surveys in the Netherlands asking the people that, do you believe that the central bank is doing a good job? Or who do you hold responsible for the inflation today? And that's how they started actually asking people about how much do they really trust their central bank. And as you can imagine, we don't yet have that. And therefore, I've just relied on the most blunt proxies of legitimacy in India. Maybe the Supreme Court judgment doesn't quite bring it out as well, and maybe I should look for something sharper. But if you ask, for example, if you look at the kind of statements that politicians make on the floor of the House, etc., and I've cited them in the chapters, where they said that, look, we started out with a low trust institution where we thought that the Reserve Bank of India was actually acting in British interests and was lending only to British businesses and things like that. But over the years, Reserve Bank of India has become the most respected institution in India, and you see language of that sort. Maybe I should find a sharper Supreme Court judgment, but in the absence of a, people street level survey of how much do you trust the Reserve Bank of India, I was thinking this is the best that I could kind of work with to set up that paradox of de facto legitimacy, but conventional legitimacy doesn't exist. So if that helps, yeah.
Yeah, that's clear. That definitely makes sense.
Okay, great. So are there any other questions? So if not, maybe I can a few comments from an economist's perspective. So we, as you know, we usually work with data and do empirical stuff usually and try to quantify what's happening. But I think what you are doing is quite nice and interesting. So, and there are a couple of parts I think that might be much strongly emphasized, maybe or deeper explained. So one thing is that first, from the broad perspective, what people usually think about independence of central banks is whether it's independent from the government or not, right? And now, here you presented us some additional forces. So bargaining with banks and financial intelligentsia. So would be, I think, helpful to explain how strong or how important they are in this bargaining process. So that's one thing. So what you are saying is that when we think about independence of central banks, it's not only independence from the government, but from all other stakeholders that are involved in this financial system, right? And while doing that, so that might be one central message. And then while doing that, what are the, as clear classification saying that what are the goals and targets of each stakeholder? So for what is a goal of a bank or financial intelligence? Yeah, like very likely maximizing their profits, right? What is the goal of central bank? Stability, price stability, employment stability, things like that. So like they want stability, right? And like serving public, but by providing or guaranteeing stability. For the government, it's different, right? So like how they are different. And when you classify it, like when for different operations, for different policies, how their goals are different, those stakeholders.
Yeah.
Right. And then, so there would be another dimension of the problem, which is the time issue, right? So for instance, in normal times or good times, growth times, right, their goals are very much aligned, very likely. Okay. But like in recession times, for instance, their goals might not align that much. So in those times, in crisis times, in recession times, in bad times, right? So how this bargaining process works and like what happens, and then understanding these things, or like showing some evidence that not only the government but also the other players play a role, would be interesting. And lastly, maybe, have there been other countries who had similar phases, who have similar practices as in India, or does this, or like some aspects of these practices are unique for India, and how and why? So explaining those, but like two things are like classification for different stakeholders and timing for different time periods. And maybe third, any other similar experiences in the world.
Got it.
That's nice.
Yeah. Okay, understood. Thank you, Zafer. Classic economic modeling exercise is what this leads up to. Yeah, I'll see how much of this I can build into a tight model.
Yeah, that's super nice. So thank you very much. Thank you all for your contribution.
Thanks, everyone.
Yeah, it was a great session, and I would like to also remind that like same time next week there will be the next guest speaker, Priya Chaudhuri, a PhD candidate at the School of Law, University of Reading, will present their project titled "Reform at the Crossroads: Addressing Private Benefits and Power Struggles in Indian Takeover Law," which is another interesting topic. So everyone is welcome for next week as well. Take care and have a lovely day. Bye. Yeah.
Bye. Thank you.
Thank you.